A piece of legislation just moved through the United States Senate that could directly change how much you pay for medications every month, how your Social Security check is calculated every year, what protections surround your finances and your home, and what level of care and accountability exists in every nursing home in America. It is called the Elder Care Protection Bill, and senior advocacy organizations are calling it the most comprehensive legislation focused on older Americans passed in over a generation. If you are over 60, if you are already collecting Social Security or Medicare, if you are managing the care of an aging parent, or if retirement is approaching, the provisions inside this bill have direct and practical consequences for your financial and physical well-being. The problem is that most seniors do not know what is actually inside it. The news covered the headline when it passed and moved on. The specific changes, the ones that determine whether you get more money or less, whether you qualify for new protections, whether a deadline passes before you act, those details have not reached most of the people they apply to. And the stakes of that knowledge gap are not abstract. Several of the benefits created by this legislation are not distributed automatically. They require you to apply. They require you to update information. Some carry enrollment windows that once missed are permanently closed. This covers every major provision of the Elder Care Protection Bill in plain, practical terms. Prescription drug pricing reform, Social Security adjustments, nursing home accountability, elder financial fraud protection, housing assistance and aging in place, mental health access, and caregiver support. Every section contains information that is relevant to your current financial situation and your immediate next steps. Pay close attention to the action steps at the end, because knowing what changed is only useful if you know what to do about it. The prescription drug provisions represent the change with the most immediate and measurable financial impact for anyone currently on Medicare, and they are the result of a legislative fight that has been ongoing for decades, fought against pharmaceutical industry lobbying that consistently defeated earlier reform attempts and preserved a status quo that cost American seniors billions of dollars annually in excess medication costs. Medicare is the single largest purchaser of prescription medications in the United States, covering over 65 million Americans. For years, it was explicitly prohibited by law from using that purchasing scale to negotiate lower drug prices directly with pharmaceutical companies. That was not an accident or an oversight. It was a deliberate statutory prohibition that benefited pharmaceutical manufacturers at the direct expense of American seniors. Private insurance companies could negotiate. The Department of Veterans Affairs could negotiate and routinely paid substantially lower prices. But Medicare, the program representing more drug buyers than any other entity in the country, could not. The result was that American seniors were paying some of the highest prescription drug prices in the developed world for medications that people in Canada, Germany, Japan, and virtually every comparable country were accessing at a fraction of the cost. The Elder Care Protection Bill expands and accelerates Medicare's ability to negotiate drug prices across a significantly broader list of medications than any prior legislation permitted. Those negotiated prices take effect on a faster rollout schedule than previous reforms allowed. The bill also establishes a binding annual cap on out-of-pocket prescription drug costs for Medicare beneficiaries. That cap creates a legal ceiling on what any Medicare recipient can be required to pay for medications in a single calendar year, regardless of how many prescriptions they take or how expensive those medications are. For seniors currently spending $200, $300, or $500 monthly on medications for diabetes, cardiovascular conditions, arthritis, blood pressure management, or cholesterol, both the negotiated pricing and the out-of-pocket cap are changes with direct and measurable impact on monthly household finances. Review your Medicare plan's updated drug formulary carefully to understand how the new negotiated pricing affects your specific medications. Social Security has been the foundational financial support of American retirement since 1935, and the promise at its core has always been straightforward. You work throughout your productive years, you contribute a portion of every paycheck to the system, and the system provides a guaranteed monthly income when those working years are behind you. For 90 years, that promise has represented the difference between financial stability and poverty for tens of millions of retired Americans, and protecting the integrity of that promise is one of the most consequential responsibilities in domestic policy. But two structural problems have been quietly eroding the real value of that support for decades, and the Elder Care Protection Bill addresses both of them directly. The first problem is the inflation measurement used to calculate annual cost of living adjustments. The Social Security Administration adjusts monthly benefits each year based on the Consumer Price Index for urban wage earners and clerical workers. That index tracks the spending patterns of working-age people in urban areas, people who spend significantly on transportation, employment-related costs, electronics, and other categories that retirees spend far less on. The categories where seniors concentrate their spending, healthcare, prescription drugs, in-home support, utilities, and housing, are precisely the categories that have experienced the steepest and most sustained price increases over recent years. The gap between what the official adjustment says inflation is and what retired Americans actually experience in their daily spending has been widening for years, and every year that gap persists, the purchasing power of Social Security benefits erodes further. The Elder Care Protection Bill pushes for the adoption of an inflation index designed specifically to track senior spending patterns. When that index is applied to annual adjustments, the monthly benefit increase will more accurately reflect the real cost increases that seniors face rather than the spending profile of a working-age urban employee. On a fixed income, the compounding difference between an accurate adjustment and an inaccurate one accumulates into hundreds and eventually thousands of dollars over the course of a retirement. The second Social Security provision in this bill addresses long-term solvency. The Social Security Trust Fund was projected under current law to face depletion by the mid-2030s. At that point, without legislative intervention, the program would have been forced to implement automatic benefit cuts affecting every current recipient. The Elder Care Protection Bill adjusts the payroll tax contribution cap so that higher income earners contribute proportionally more to the system, extending the solvency of the trust fund and protecting both current and future beneficiaries from those automatic cuts. Nursing home reform is the section of this legislation that carries the most serious consequences for the safety and dignity of the most vulnerable older Americans, and that has received disproportionately little public attention. Federal oversight investigations have consistently documented that a substantial percentage of American nursing homes have been cited for serious violations. Chronic understaffing is the single most prevalent contributing factor across violation categories, including inadequate response to resident needs, medication errors, poor sanitation standards, and in the most severe documented cases, physical and emotional abuse. A facility operating with too few trained caregivers to adequately serve its resident population will produce poor outcomes regardless of what its marketing materials claim. Under the Elder Care Protection Bill, nursing homes receiving Medicare or Medicaid funding, which represents the vast majority of facilities operating in the country, are now subject to enforceable minimum caregiver-to-resident staffing ratios. That requirement means a resident has legal recourse when adequate staffing is not maintained, and it means the chronic understaffing that has driven violation rates for years faces a structural constraint it did not face before. The penalty structure for safety violations has also been fundamentally revised. Previous fine levels were low enough that many facilities absorbed them as a standard operating expense while making no meaningful changes to their practices. The new penalty scale is calibrated to make compliance financially preferable to continued violation, and repeat offenders now face potential loss of Medicare and Medicaid reimbursement, which for most facilities would make continued operation financially impossible. Transparency requirements have been expanded as well. Nursing homes must now make inspection reports, staffing data, and violation histories publicly accessible through standardized reporting systems. When you are evaluating a facility for yourself or researching placement options for a family member, that compliance record is now part of the information you can access before making a decision. Elder financial fraud has been described by federal law enforcement as one of the fastest growing categories of financial crime in the United States, and independent analysis consistently concludes that the documented figures almost certainly underrepresent the true scale of the problem. A large proportion of victims never report what happened to them, and the reasons for that silence are varied and understandable. Shame about having been deceived, uncertainty about whether anything can be done after the fact, concern about losing independence or being seen as incapable of managing their own affairs, and in some cases, cognitive changes that make it difficult to clearly articulate or even fully understand what occurred. The result is that official statistics on elder financial fraud capture only a fraction of the actual losses being sustained by older Americans every year. The schemes operate across a wide spectrum, from highly organized criminal enterprises running phone-based impersonation scams to individual opportunists exploiting trusted relationships with elderly family members or caregivers. The Elder Care Protection Bill creates a dedicated and sustained funding mechanism for elder fraud prevention and prosecution. Federal investigative resources specifically trained for these cases are being expanded. Victim recovery programs are receiving new funding. Banks and credit unions now have clearer legal frameworks and stronger requirements to monitor for suspicious patterns on senior accounts and report potential exploitation. Public education funding is also a significant component of the bill's fraud provisions, because the most effective individual protection against fraud is a senior who understands the specific tactics being deployed against people in their situation. The housing provisions in the Elder Care Protection Bill recognize that for most seniors, the home is simultaneously their largest financial asset, the anchor of their social identity, and the primary daily determinant of their physical safety and independence. No other single factor shapes the quality of life in retirement more consistently than where and how a person lives, and no other policy intervention has a broader impact on the health, safety, and financial security of older Americans than the one that addresses whether they can remain safely in their own homes. The physical design of most American homes was not built with the later stages of life in mind. Steps and stairways present fall risks. Bathrooms without grab bars and appropriate fixtures are among the most common sites of serious injury for older adults. Doorways that do not accommodate mobility devices become barriers to independence. Home modifications that would address these risks can cost several $1,000s that fixed-income seniors cannot absorb from monthly benefits alone. The Elder Care Protection Bill significantly expands funding for home modification assistance programs operating through grants and low-interest loan structures. Eligible seniors can access financial support for ramp installations, grab bar fitting, walk-in shower conversions, widened doorways, lighting improvements, and accessible kitchen modifications that extend safe, independent living. The bill also increases investment in purpose-built, affordable senior housing designed with accessibility, healthcare proximity, and community connection as structural priorities. Research has established that social isolation is associated with mortality risk and cognitive decline at levels comparable to smoking. Housing designed to support social connection directly addresses one of the most significant modifiable health risks facing older Americans. Medicare's coverage structure has carried a widely criticized and medically indefensible gap for decades. Routine dental care, routine eye exams, and hearing aids are not covered by original Medicare, despite well-documented connections between oral health and cardiovascular and cognitive outcomes, between untreated vision problems and fall risk, and between uncorrected hearing loss and accelerated cognitive decline. The Elder Care Protection Bill makes concrete progress on closing this coverage gap. New subsidy structures will help Medicare beneficiaries access hearing aids, devices that routinely cost several $1,000s per pair and have historically been entirely out of pocket. Pilot programs expanding dental care access through federally qualified health centers are being funded. Community health program investment directed toward vision services is increasing. The mental health provisions of the bill are equally significant. Accessing mental health services through Medicare has historically been complicated by low reimbursement rates that discourage provider participation and by geographic and mobility barriers, preventing many seniors from accessing in-person care. The Elder Care Protection Bill improves mental health reimbursement rates and substantially expands telehealth coverage, allowing seniors to access counseling and mental health services from home regardless of location or mobility. Caregiver support has been one of the most chronically neglected areas of senior-related policy in the United States, and that neglect persists despite a body of research establishing clearly that the well-being of caregivers and the quality of care received by seniors are directly and measurably connected. An estimated 53 million Americans are currently providing unpaid care to an aging family member, and that number is expected to grow as the baby boom generation moves deeper into the phase of life requiring the most intensive support. These caregivers are sons and daughters who have restructured or paused careers, spouses managing increasing medical complexity alongside their own health challenges, siblings coordinating care across distances, all providing labor that is essential to the functioning of the elder care system and receiving almost no institutional recognition or financial support for doing so. The Elder Care Protection Bill introduces new tax credits that allow family caregivers to recover a portion of the out-of-pocket costs they incur providing care. Funding is directed toward caregiver training programs. Expanded respite care options give caregivers structured access to temporary relief, which research has shown reduces burnout and improves the quality of care delivered to the senior receiving it. Not every benefit created by the Elder Care Protection Bill will be delivered to you automatically, and this is the part of the conversation that most directly determines whether this legislation improves your life or simply sits in the Federal Register without affecting your daily reality. Several provisions require affirmative action on your part, and some carry time-sensitive deadlines that once missed cannot be recovered. The gap between what this bill provides in law and what individual seniors actually receive will be determined by awareness and action, and that gap has historically been large. Programs created to benefit seniors are consistently underutilized because the seniors they were designed to serve did not know they existed or did not know how to access them. Visit the official Social Security Administration website or a local Social Security office to verify whether any changes affect your current benefit calculation or require updated information. Contact your state health insurance assistance program, known as SHIP, to schedule a no-cost counseling session with a trained advisor. Be alert to any unsolicited contact from individuals claiming to help you access new benefits under this legislation. Scammers build pitches around major legislation within days of its passage. Legitimate government programs do not charge application fees. The Social Security Administration does not initiate calls demanding immediate response. Medicare does not request payment card information by phone. Any contact that feels pressured or that requests personal information before you have independently verified who you are speaking with should be terminated immediately. The Elder Care Protection Bill is law. The provisions described here are real and the timelines are running. Whether these benefits reach the seniors they were designed for depends on awareness and action. You now have that awareness. Use it. This is Retirement Wealth Watch.